Hey, today I'm going over this double bottom and double top zigzag indicator. So I have it on my chart. It's the WM Ultimate OS um, indicator. And let me see, let's go find it. All right, so you go to indicators, you just type in double and scroll down to this one right here, double top bottom Ultimate OS. All right, so you add that on. Now, when you add it on, you're gonna have some things that pop up on the chart. So you can go over to your settings on the indicator, and it's gonna have the inputs. So these are all my inputs that I have on it. It says style, visibility, all that stuff. Let's see. So it got show stats. I took those off. So if I put them on, it should pop up. See over here to your top right. All right, so these are stats. I take those off. I don't need them, but you can have them on there as well too. I got show pivots. So these are pivot points that show up on it, and I got show zigzag. All right. So yours, when it pop up, you're gonna have all these things. I took them all off so I could just have a clean chart. Now this video is gonna be short and simple. The zigzag is like a double bottom, but it's at a basically the pivot points are at a little bit of an inverted or sloped, so to speak. So basically, just think about if we were using our Fibonacci, retracement tool. These are just key levels of where price has just basically retraced back to. All right, so this pivot point right here fell a little bit before the 70% retracement level, but it created a double bottom. Now, normally we think a double bottom has to be, vertical in the same area, but these zigzags provide us opportunities to see double bottoms, a zigzag double bottom. Okay, now how you trade these is basically the same. Your targets can still be the measurement um, of this first impulse wave. All right, so you can take this just like that, and you can put it on top of the neckline, which would be the dotted green line. Right? So this possibly could be a target. You can do it like that, or you can take your extension tool, measure the impulse, bring it back down, which I prefer, and bam, see how targets hit. So you can measure just like that. You can do the same thing for the bullish and the bearish. Now, here's some key things you need to understand. So let's look at this. All right, we have a double top. Now, the question is, what are these green dotted lines? The green dotted line means that if price comes up and hit this, this is invalid. All right, if price hits the red, that means it is valid. It played out. So once again, you look at this, right? This red. Let's see. I don't know if this one showed up in red dotted line. So let's find another one. Yeah, this one right here. So this was green. All right, it's pushing up. Now everything did hit. All right. However, this dotted line also represents that hey, this will be invalid as well. Let's see if we can find another one. So typically a green line should show up here. And I need to find out why some is showing up and some is not. So sometimes indicators can be faulty. So you see right here we have the green representing this dotted line, but we also have this red down here to show that it could be invalid. Let's see. Here's a good one. We got the green representing this target line area up here. But if price came back and hit this before it hit that, then this would have been invalid. So you already see there already that it's going to show up sometimes, sometimes it's not. Um, that's why it's good to also go ahead and have your stop losses or your areas that where you can say that, hey, this is going to be invalid if it break. And one of the key things you can say that this is invalid is that I will go ahead and that if it breaks uh, this first pivot point, price breaks it, I just go ahead and exit the trade. So you're going to learn over time that, hey, taking these small little losses and then letting your runners, your winners run, you'll be in better shape, over time. Let's see, we got this one right here. So you see the green did show up on this one, right? So you would have went short here, right? Targets were hit, right? You're pretty good, but for whatever reason, if you would have entered right here, and all of a sudden price comes pulls back here, all right, bam, we're out of the trade. We're done. Okay, keep it simple. So like that. Got another one. Got a double. Okay, this is a great one. This one failed, right? So we're here. We push down. We come back up. We're expecting price to go lower. It did not. It stopped, found, and it came back up here. We targets, I mean not targets, but stop loss hit. We're good. Let's say for whatever reason we entered here. All right, that's just a 19 pip. You don't even have to worry about a 30 pip. Just stick with this neckline. Bam, we got knocked out of trade. That's fine. That's cool. Okay. You can turn around and you can look. You can see this a retest. And you can say, hey, maybe I want to get in because what is this? This is a what? A bull flag. So you see what's going to start happening is that when you start trading more and more and more, you're going to see all these type of patterns showing up, and you can be able to correct yourself. Okay, look at this box. Same thing, box. Okay. What can we do? See how we're doing this? What's this? It's a flagpole. All right. Put it right inside. Now you see I did my vertical. I mean, like a slope. You can do it straight up if you wanted to. All right. We'll try both. But look at that. Target's hit. Here, but what about all the rest that came up? That don't matter. This target was hit. We remember we're not in the market trying to get every single to the exact point. We want to be in the region in the ballpark. That's not realistic. All right, let's do it more vertical, which means it's just straight up. All right, and then you just put it right into the box. Bam. All right, still the same area. Bam. We would have got out right here. All right. So first thing first, start mastering those double bottoms, the double tops. Don't worry about if you taking some L's or whatever. That's just part of it's gonna happen. But over the course of a month, you're gonna start seeing that you're making a lot more progress and seeing some winners. Um, and just stick with it and be patient with it, and just make it happen. You just got to be able to do your same setup over and over again. You're gonna have clusters. You're gonna have clusters of L's that happens. Okay, stick with it. Also, learn to start treating your trading account like a savings account. So if you want to do $50 every week, every 2 weeks, boom, that's fine. At least you're depositing into your account, so you always got fresh capital coming in, but you're already trading. Stick with it over time, and you'll realize that you'll be good to go. And you're sticking with a system, so your system have to mathematically make sense. Okay. Now, I will admit to this that I do more of a 1-to-1 ratio, unless I go on a higher time frame, because I'm not really a big swing trader. But a 4 hour chart is better suited for people who have a little bit more patience and they can swing. The risk reward is much better. So if you, let's say we was on a 4 hour chart and you wanted to take a trade, and let's see if one of our, so yeah, uh, let's look at, all right, so this one was a double and it made it all back to neckline. Let's see, let's get back to here. So, oh, that's a good. So, it's for 405 pips on US dollar Japanese yen. All right, for whatever reason, let's say you can get the optimal entry here, and you want to set it down, your stop loss here. All right, so we're gonna do a 52 pip stop loss because we're going back to this neckline, right? or a invalid line right here. Look, that's a basically that's a 1 to 4 basically. All right. So for every $52 that you're risking, you can make 400. That's great. So you see what happened when I did it on the 4 hour, it changed. Okay, but you also have to adjust. You know what size position are you taking? So because you got to give yourself a little bit more room, a little bit more grace for price to breathe and move. Okay, but it can be very more substantial, and also you got to be more patient on the 4 hour to let things open up and run. All right, so I hope this little video helps you guys. But yeah, check out the indicator. Look at it. The zigzags are really good. They show up way more than a regular double bottom or double top. I mean, double bottom, yeah, and a double top. So check out the zigzags. They're phenomenal. They, oh my God, you see them a lot too on like the 5 minute chart. They show up as well. So you see already on this chart, you see all these double top stuff. Um, that's basically playing out like right here. We got boom right here, and then we finally get down here. It pulled back, but then it finally hit it. But like me, when I'm this close from my target, like I normally go ahead and just secure profits because I train myself not to be too greedy. Like some people are like, nah, I'm gonna wait. Yeah, you can wait, but then look at this pullback. Like that would have made me a little nervous. And like, man, I should have took it. But yeah, it hit. I get it. So a lot of y'all are new. Y'all gotta go through y'all training with it. Like certain things, man. Trading is just really all psychological, right? Um, all right. So look, this one showed up right here, but at the same time too, um, did this fail? Let me see. So we got here. We were in profit. It really doesn't have a real strong. It didn't have a target on this for whatever reason. But it went okay. Let's see what this was. Let's see if we got any in here. That's 12 pips, whatever. I don't know if that would have been worth it. Oh, you gotta know that too. If you're on 5 minute, you're really scalping. Right? It's not bad. So you're risking 12 to make. I mean, you're risking 7 pips to make 12. I mean, we could deal with that. So if you was using a standard, you saying I'm risking basically $72 to make $125. Yeah, you can do that. Um, Here's another one. I mean, we was going good. You can lock in these profits. So this one dropped almost 17 pips. All right, so that's 170. Of course, you can move your stop loss in the profit. You could, but if it came back and hit, you will lose 140. But you see these dynamics that we're using and seeing how they're playing out, boom, playing out over and over. Like this one right here, playing out, hitting up. It's a double bottom right now. Actually, I'm in this trade as we do this video, right? And my targets actually are about to be hit. Let me look at my trade because I did take this. All right, but yeah, stick with it, guys. I hope you just believe. Yep, my targets were just hit, so I just made $111 off of that. All right, guys, stick with it. Stick with it. Don't chase. Don't chase all these different trade systems. Don't like all of them work. You just got to be disciplined. All right. All right. Y'all have a great day.